Hello and welcome to another exciting edition of Real Day Trading. Why is it exciting? Well, I'll tell you. Here you're looking at the 5K account. It's currently around 3,700. That doesn't sound very exciting, does it? No. But 2 days ago it was at 800. So what happened? Other than Home Depot happened. I'll tell you. As you know, I have been looking for a method that is consistent, can be repeated, and is profitable for traders that have accounts restricted by PDT rules. In other words, everyone who has less than 25K in their account cannot day trade. Now I can hear, miss me with all of the get an offshore broker, get several accounts, and you can do 3 day trades every 5 days in each account, or just go to cash settled. Really? Oh, have you had 3 straight profitable months in a row? You haven't? Oh, maybe you should stop suggesting shit. Everyone likes to say, oh, no, you can get around those rules. Just do this. Just trade futures. Just. Guess what? Everyone's losing money. Everyone who comes into the sub and into the forum and learns the method, and they have over $25,000, they're doing great. Some of them are doing so well, they've quit their jobs and have turned into full-time traders. That's the goal, right? You know who's not doing well? People who don't have the money to day trade. None of those other methods work. The method that we teach works great if you can day trade. Why? Because particularly in this market, stocks frequently lose relative strength and relative weakness throughout the day. If you can day trade, you have the flexibility to go in and out of those trades. But with only 3 day trades every 5 days, you're essentially a swing trader. And doing this challenge, the first time, took 3 days, easy, done. But could I repeat it? That's all that matters. No. Why? Because in a choppy market like this, the swing trades were unable to have enough time to become profitable. So I was looking for something, anything that can be documented, shown to work time and time again, and you can teach it. I am cautiously optimistic. I believe I have found that thing. And I will explain. Let's go to the chart. We're going to start with SPLK. Thank you, Dave Wise, for pointing this one out. It is a perfect example of what we're talking about. So here we have algo lines. Right? I'm going to get rid of this one for a minute. And here's the difference, by the way. This is not ascending triangles or any of those things. You have ascending and descending lines. Your first candle has to be above average volume. So relative volume has to be above 1. Here it clearly is. Here's your average volume. Here's the candle right there. So we extend it up off the top of the wick, and you see 1, 2, 3, 4, 5, 6, 5 touches. That's pretty strong confirmation of this line as resistance. You also have this candle here, really high volume. This is right before the big drop. Top of the candle comes right down, hits this one, and they meet. This point right here where they meet, this price, which here is around 45.30. That's the point. That's the price point that we're looking at. And you could see SPLK kept coming up to it, knocked back down, coming up to it, and then it started hanging around here. Hanging around. Stock had alligator blood. Anybody know that movie? Post it in the comments if you do. That'll be fun for everyone. And then finally, right here, it breaks through. Look what happens the moment SPLK breaks through that price point. It's just off to the races. That is a very powerful signal. Let's go to SPY for a second. Yet another one. Now, to create these price points, you need either two algo lines, one ascending, one descending, right? So we could have one coming down here, one there, and where they meet, or an ascending or descending algo line and a horizontal line of support and resistance. So once again, you know it has to start right here at a candle of higher volume like this one. So here we have above average volume, and then there you go right across. This is a clear area of resistance here. SPY can't get through it. Several attempts. And you have this one here. They met right at around 456.70. And look what happened today. SPY kept going around it, dancing around it here, 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 broke below it for a minute, came back up, and then finally released. And look what happened the moment it broke out of this compression. It just kept dropping. That is institutional selling. That is an algorithm that has this price point and looking for confirmation of that break, which it did not get here, but it got here on this candle right there. There it goes. You can see also back here, when it breaks, look at the volume come into play. Here's your confirmation right up here. Institutions pop in. Look at that. Straight up. Here's another one. Geo. You can see Geo. Get rid of that one there. Right here. Oh, sorry, right there. Bring it up here to there. Right there. Damn it. Oh, there it goes. Sorry. There it is. Okay. I'm going to make sure I have the right candle for Geo. Here. There's the high volume one. Here. Bring it into here. There's the horizontal one there. Bring it down to that one. There it is. Okay. Look where it meets. Right there. There's your point, 610. So normally you'd wait for Geo to break through the 50-day moving average here, right? Which came in at around 625. But here's your algo price point, which was right here. And the moment it breaks through this here, look what happens. Starts going, continues. Look at this institutional volume here at the end on this stock. That is an algo price point break. Now there are different types here, right? Obviously, Home Depot did not have a price point, but it had double confirmation. You had one algo line, ascending line here, broke through. Here's your second one, broke through again. It breaks through two lines of support. That is why we added on to our short for Home Depot. You can look now at Citigroup. Now this one here, you have an algo line that goes all the way back to November of 2020. Comes in, high volume candle there, comes in here, touches this candle here, and then you have this, which is your horizontal one, also a high volume candle, right there, creates a price point of 54.15. And look what happens when it breaks below that. Straight down. Now, sometimes you have the benefit of having an absolute price point. Other times, don't have a price point. Now, the price point is the more powerful indicator. if you can get the two lines, whether it's a horizontal and ascending, descending, or one ascending, one descending line, both meeting at a point. If you can't get an absolute price point, the next best thing is what I showed you on Home Depot, which is double confirmation. You also have this, which is Algo corridors. Here you have a very clear tunnel for BIDU. Here, this line, here, this line, the price is staying right within it. Today, broke below that corridor. So we shorted it. Is that as strong as the price point? No, but it is strong. So now you have a way to even adjust your position size based on how strong or not strong you think that algo support or resistance is. So price point, highest level. Double confirmation, second highest level. Breaks out of a clear corridor, third highest level. A simple algo break, fourth, right? Easy. 1, 2, 3, 4, right down the line. We can now look at an interesting one today with Apple, because Apple has a clear price point here. It was 175.70. You have horizontal line from heavy volume and an ascending line over here, also off heavy volume. And you could see it had relative strength. Here's SPY, and at the same time, SPY here, let's just bring this here, SPY drops 0.52% from here to here. It's the yellow line. At that same period in time, Apple, bring it over one back, there we go. Apple goes from here to here, goes up 0.04%, or basically stays the same. So you have SPY dropping 0.5%, and SPY not drop, SPY dropping 0.5%, Apple not dropping. That is relative strength. So you have stock with relative strength, also has extremely strong algo price point support below it. Okay, we didn't go long Apple in like a regular, we took a lotto play on it. Why do we only do a lotto play? Because it didn't break through a price point here. It did that yesterday and 2 days ago where it broke above it. It just had it there as support to bounce off. However, the market decided to break its algo price point, and as a result, so did Apple. And you can see right here, Apple's dropping, but the moment the algos see it is breaking this price point, it free falls right down to there. So tomorrow, if Apple cannot get back above this level, then we will close the lotto play. It expires tomorrow anyway. And we will perhaps even short it because it is now breaking through the price point. Remember, that's the most powerful signal. So right now, Apple has a very powerful bearish signal. What we need to identify, is it dropping because the market was in free fall, or is Apple weak itself? Because it was relatively strong before the market decided to say, screw it, and just drop. If we can figure out a way to continue to test this, right? And you can look, you just random do hood. Here's hood. And sometimes, by the way, you can, if it doesn't meet up where you currently are, you can extend it out, extend out the line, extend out the line. Now here, it broke above algo resistance, right here, hood. Came back down as acting as support. Here you have it going up right there. So this should mitigate this line. Line's gone now. However, the price point would have been right at 1340. And it's interesting to see that is the line, that line, here's your price point line, exactly where Hood is dancing around, right? Let's take a look at maybe Amazon. Amazon has a very clear price point line right there. It is at 34.16. 34.16 is the line. If it gets above that, right, well, that is where you want to go long. Right now it is below, and so Amazon, if anything, is a short. And today, yes, certainly doesn't look very strong. Let's take a look at Tesla. Here is Tesla. We don't have a price point. We can, here's an example where you can extend it out, right? So if you naturally extended this like that, you'd come right in at 11.11, let's say. There's your price point. It's below that. It breaks above this. Just put an alert there. Just like that. Now Tesla becomes a good long. Until then, it is in an algo corridor, and you'd be looking for a break above or below it. But there is your price point if you extend it out. Not, again, as significant as if it was within the price action. This would be more of a hypothetical price point. And again, this is all kind of new. You're not going to find this anywhere. And if you do, please tell me where else this might be, because I've looked. This analysis is nowhere else. So as far as I know, we have created it. I already showed you here, Home Depot, you had the double break, right? 1, 2, so that why we added to the short. But let's take a look at BIDU, which we did today. Here is the corridor, drops below it. That's why we shorted BIDU. Take a look at Citibank, and here, Citigroup, sorry, you have one that starts all the way back here in 2020, November 2020, providing the upward line. Here's your horizontal one right there. Zoom in on it. See it there? There's your price point right here. Right? And that price point was $53.95. And here is Citigroup. The moment this line, this bar takes it below, Citigroup drifts, gone down. Look at the volume at the end. Huge. Institutional selling right here, once again. So the idea would be PDT restricted accounts need to only make premium top level trades. Why? Because if you're swinging a stock in this environment, you have to have more than just a strong daily chart. You have to have more than just it has relative strength. That can get stripped away really fast. But price point breaks, algo price point breaks, are much stronger signals. Yes, can you look to see, is the stock relatively weak? Sure. Again, if you don't have this measure, it's pretty much as easy as just going here and finding out what the percent change is, right? This is 0.64. And then let's just bring this to an equal point here, 0.61. And then you do the same thing with the stock, right down to there. 1.0. So this here is relatively weak to SPY. It dropped more than 1% over the same period of time that SPY dropped 0.6%. That's just a quick way to measure it, right? Just comparing the two. This stock was relatively weak, so when SPY dropped off a cliff, this stock dropped off a cliff proportionally stronger. These are the type of trades we're going to trade going forward, but these are the type of trades that anyone with a PDT restricted account needs to focus on. You need to go through and find the stocks that have these price points. Let's take a look at Costco here. Here you have, well, right up to there, it was pretty strong. Not strong, but you had resistance here. Here's your upward sloping line here. You also had one right in here that came up and met it right there. And this one came all the way back from here, right? So March 2021 comes all the way up through, has a clear line, a lot of touches on it, hits this point right there. And that point was at 572. 572 was that point for Costco. And right here, by the way, is 572. Right there. You can see it. Bring it back here. Bring that down. Right there. So here it is. We'll extend that out to right there. And there is your price point line right here. Now let's see what happened. Breaks through, off it goes. Gaps up again, keeps going. 575 now. That is a really good indication, because all you needed to know is what was the point where these two met? And did the stock break above or below it? And what happened? So if you have a stock, let's say this was, I don't know, on Tuesday. Costco looks good. It looks strong. You want to maybe go long on it. You just set an alert right here, because look, you can see on Tuesday it came right up to that price point. It had a high of 571.22, bounced back down again. You want to wait until that point is broken. The moment it's broken, then bam, you go long, and you can have confidence on a continuation of that price action. As you see here, it broke it yesterday and today gapped up again. Same thing with Geo. Broke it today. We're looking for a gap up tomorrow. In fact, Geo, let's go to here, trade, here, charts. Geo's right here. Let's see if we can get ourselves 190 shares of Geo, $13 at that, so we can probably get two more. Might as well make sure we get as many as we can. Close that there. There. What do you do? There. Actually, you know what? I want to beat out that bid, so let's try 191 there. Let's see if we can get the stock and hold it overnight. It's only 191 shares, but again, price point break on Geo suggests that tomorrow, there it is there, the stock is going to continue to go up. In fact, your next point is right around there. So I would suggest you go through a list of stocks, draw these lines. And I know it can be complicated at times, right? Because there are a lot of different ways to draw them. I mean, we could take a look here at Facebook. Let's just clear all out, right? And we'll go to a single chart here. Here's Facebook, right? Okay, well, here's clearly a high volume candle. So you're going to start here. We're going to draw the line to the next candle, the next wick, right there, right? It actually meets up with the 50-day moving average. Then we're going to try find another high volume candle. This one barely qualifies, so it's more like that one. We're going to draw another line right into here and right there. Not particularly strong. You have a couple of touches here, so it's okay. But what you do have is a very narrow corridor that, if you extend it out, looks like it'll meet right around there. 228, right around 229 there. So you may be looking for the 50-day moving average, but what you really want to see is, can Facebook get above this price point of 229, 229.50-ish, that area. But until then, it's in a corridor. So you just set an alert for a break of the top, set an alert for the break of the bottom, like that. The idea, once again, would be find 2 or 3 trades like SPLK a day, where you have very clear, there's no doubt, this stock just broke through that price point. And make 1 or 2 trades a day like that in your PDT account. And that should give the additional edge needed to overcome the ridiculous restrictions on the account and build it fast enough that you can get over 25K. That is the idea. And if you try to go to an offshore broker that does take US citizens, good luck, because you're going to be paying 20, 30, 40% in fees. Do you realize how much more you have to do to be profitable? Think about it. If you had a day where you were up 30% in your account, you'd be like, great. But if you're paying 30% in fees, well, that great day, you just broke even. If you think, oh, you know what? I'm going to trade a cash settled account. Really? Okay. So you had nice gains here on SPLK here. What you can't do are spreads in a cash settled account. You can't create spreads. And if you wanted to trade, let's say all of a sudden Tesla, right, broke through the 1100 mark. Great. So you go to Tesla and you have your cash settled account and you want to go ahead and go long Tesla. Okay, well, there's your option right there. You're paying around $2,000 for it. If you had a margin account, you can go, okay, well, I'm just going to do a 1 cent there, and I'm going to do, let's say, here to here. Well, now, actually right here to here, now it costs $428 to get a $10 spread. Well, you can do that, right? You can't do that in a cash settled account. You're also only using half your money because you have to have it settled by the time it comes back again the next day. So you have only half your money really able to trade with. And what winds up happening is you start gravitating towards these out of the money options. And you're thinking, I can day trade them and just have quick turnarounds. So I'm not going to use up much of my cash if I buy 10 of these 20-cent options. And you start depending on that. It isn't a good way to trade. And by the way, I don't know what the percent is, but so many violate the regulations in that account. You made a trade, day traded it, you had profit, and then you use that profit along with your other cash in another trade. Oh, and you took profit there. Well, now, sorry, you lose on Jeopardy. Over. See, it's not good. Nor is the idea of managing 3, 4, 5 accounts. Look, I manage 3, 4, 5 accounts, and it is not a fun experience, particularly for new traders. Definitely not a fun experience. There you go. Sorry, there's your option table. And for those who are thinking, you know what, let's just do futures. Let's just do, let's just do ES. Do you know how hard it is to trade this? You need to be a professional trader to trade futures. Yes, you may get lucky in the beginning, you may go back and forth, but there are traders who are full-time traders who still aren't good enough to trade S&P futures or NASDAQ futures. There is no shortcuts to this. Go through your charts, go through your stocks, put your alerts, find those algo price points, because I am cautiously optimistic that that is the key. As for everything else, well, you can watch more videos and you can read the damn wiki. Because that right there, that reading the damn wiki, that's going to get you to be able to understand all the shit I just said. But if you don't, and you're like, well, but wait, which candle should I use and where should it go? Well, you know what? That's in the wiki. How do I even find the stocks? That's also in the wiki. When do I exit those trades? In the damn wiki. Is SPY going to, in the wiki, all in the wiki. Wiki. Read the damn wiki. Oh, and have a pleasant night. I hope this video was helpful in your trading journey. See you out there tomorrow. All the best and good night.